the US stock market experienced a sharp downturn on Wednesday, April 2nd, 2025, following President Donald Trump's unveiling of sweeping new tariffs in a Rose Garden address dubbed Make America Wealthy Again. The announcement, which included a 10% baseline tariff on all imports and additional reciprocal tariffs reaching as high as 54% on countries like China, sent shockwaves through Wall Street, with investors grappling with fears of inflation, supply chain disruptions, and a potential global trade war. The S&P 500, SPY, a key benchmark for US equities, saw significant volatility throughout the day. After closing at 560.97 the previous day, the index opened at 550.05 but plummeted as the tariff details emerged. By 5:30 p.m. BST, real-time data showed SPY trading at 548.819 USD, reflecting a steep 2.2% drop in after-hours trading. The sell-off deepened as major tech stocks bore the brunt of the decline, with Apple shedding 4% and Nvidia falling 3.3%. The Nasdaq-focused QQQ ETF, tracking the tech-heavy index, tumbled 3% during Trump's event, underscoring the market's unease. Analysts pointed to the tariff's broad scope, targeting $1.4 trillion in imported goods, as a primary driver of the reaction. "This is leaning into the ugly scenario," said Brian Mulberry, portfolio manager at Zacks Investment Management. "The total tariff burden, when averaged out, is higher than anticipated, and markets are pricing in the risk of retaliation." Indeed, futures for the S&P 500 sank further in late trading, with posts on X reflecting a growing sentiment of panic among investors. The Dow Jones Industrial Average, while less tech-dependent, also felt the pressure, ending a choppy day flat after earlier gains evaporated. Earlier optimism, evident in a 598-point rally on March 24th, when investors hoped for a softer tariff stance, gave way to renewed anxiety. That hope had briefly pushed the Dow up 2,000 points from its March 14th lows, but Wednesday's announcement erased much of that goodwill. Global markets braced for fallout as trading partners signaled countermeasures. European Commission President Ursula von der Leyen hinted at retaliatory tariffs, while Canada and Mexico, spared from the baseline 10% levy for now, remained under threat of prior 25% duties. The euro paired gains against the dollar, and safe haven assets like gold ticked upward as investors sought stability amid the chaos. Despite the White House's insistence that the tariffs would spur domestic manufacturing and job growth, economists warned of higher consumer prices and a possible recession. The S&P 500's 9% slide from its February 19th peak, coupled with a first-quarter loss of nearly 5%, the worst since 2020, highlighted the market's fragile state. "Uncertainty is the killer here," noted Michael Arone, chief investment strategist at State Street Global Advisors. "Volatility will likely persist into Thursday and beyond." As after-hours trading continued, the SPDR S&P 500 ETF, SPY, hovered at 548.819 USD, down from its daily high of 570.436, a stark reminder of the market's swift pivot from cautious optimism to outright concern. With Trump doubling down on his trade agenda, Wall Street now faces an uncertain road ahead, balancing the promise of economic liberation against the specter of escalating costs and global friction.